We're talking about relative strength with Linda Raschke and how she uses it to find good opportunities in the futures market. So Linda, first of all, how do you use relative strength in the futures market?
There's two ways that we use relative strength. The first way is on an intraday basis, and the second way is for longer term positioning. And in general, with relative strength, you are always looking to buy the stronger and sell the weaker, which is sort of counter to what we've brought up with our traditional American culture, which is buy on sale, buy on discount. Everybody wants a bargain. So it's a little bit harder for people to pay up for the thing that's most in demand.
All right, so how are you seeing this in a chart, or is it a number that you're saying below this number I'm a seller, above it I'm a buyer? How do you actually find it?
Well, let's talk first with using it on an intraday basis, since we have a lot of day traders in this business. Obviously, everybody's familiar with the four indices, the Russell, the NASDAQ, the Dow, and the S&Ps. So for example, if let's say we were just watching all four of these charts on a 5-minute basis, okay, now what you're looking for is just measuring one swing to the next swing. So for example, if the Dow and the S&Ps make lower lows and the Russell and the NASDAQ make higher lows on just say a 5-minute retest, then in theory the vehicle that you want to use to buy to go long on that non-confirmation would be the NASDAQ or the Russell, because they were the strongest. They didn't pull back as much. And of course that translates to intermediate term timing as well. So for example, if you look at the last market bottom that we made, where the S&Ps made a lower low but the NASDAQ made a higher low, the shares that were most in demand and the index that outperformed the most on that rally that we had during the month of October was the NASDAQ and the technology. So from a pattern recognition basis, that's the first way. Now the second way is I actually trade a lot of futures markets, and obviously everybody's noted the correlations now between the currencies, the gold, the crude, and the indices. And you can call it risk on, risk off, you can call it inflation, deflationary psychology, whatever name you want to give it. It's basically global money flows. So if you're watching, again, let's just take 5-minute charts of each of the currencies and the gold and the crude and the copper. Let's say, for example, that the market sells off and crude makes a higher low, okay, but the rest of these markets make a lower low. If you're looking to then position for a long trade to the upside, crude would be your vehicle to purchase. And obviously we just saw a recent rally in the crude oil for the last 2 weeks that took it up above 100, while the other markets were underperforming. And for example, natural gas was your relative strength laggard, making contract lows. But sometimes the tendency of people is to sit there and think, oh, well, I'll buy the natural gas because it hasn't moved. Well, there's a darn good reason why it hasn't moved, because there's an abundance of supply. So for pattern recognition as well as market vehicle selection that you're going to use is a great way on an intraday basis.
So Linda, people can find out more right here at MoneyShow.com with a presentation you did.
Yes, I did a 1.5-hour lecture at your Chicago show, and I believe that is taped, and the link is there on the website for people to go and look at the slides and learn in much greater depth this subject matter.
Linda, thanks for being here.
You're welcome, Tim.
You're watching the MoneyShow.com video network.